Okay, hello everyone. How's it going? So I can see everything here. So I'll just take a second to introduce myself before we get going and see what's going on in the markets today. My name is Michael Nauss. I'm a chartered market technician, a systematic trader. I guess you could call me a quant. So I'm one of those nerds who spends a lot of time staring at charts, looking at statistics behind seasonality trends, looking for what's happening when it comes to individual markets, broad markets, and then individual stocks and individual names to trade. And again, do that as a systematic basis when it comes to, again, looking at the charts all the way down to, can I find a time where this particular thing happened and that gave me a better than 50-50 outcome, that the trade end up well. So you'll hear me talk a lot from that kind of statistical and technical bent. Today, what I'm going to do is I'm going to take a look at the broad overall markets. We can go crypto, we can go into the stock market, we can talk about Forex for some of you guys out there that are interested, and get a broad picture of how we're looking going into the open. We can take a look at some individual names. I see there are some low floaters that are moving around. That may be interesting to some as well. But I usually like to start my analysis when it comes to Bitcoin, and not because I'm a super crazy crypto guy and I just need to focus on the cryptocurrencies all the time, but I find it's a pretty good bellwether for what's going on in the overall market. So crypto being a risk asset, as far as as I understand it, and the way that I look at it as well. And if you have crypto moving higher, then it's very unlikely that I think that you have everything crashing, right? If everyone is very interested in crypto, if everything is very interested when it comes to people are buying fart coin, if fart coin's hitting new all-time highs, you're probably not going to have a crash in the overall market because you have this kind of degenerate and speculative nature. If you have crypto hitting new all-time lows, that to me is a big risk off barometer when it comes to overall markets. So while we're doing our broad zoom in, it's just interesting to bring up what's happening in Bitcoin for the last little bit. And then I think some things that are happening in Ethereum are actually a little bit more interesting here as well. So Bitcoin, you can see I just drew this box around it. Bitcoin, and especially Bitcoin, but a lot of crypto, has this trend of huge moves that are very, very interesting, and then a whole lot of nothing, right? So, this 7-month base that we had down here was this whole lot of nothing. I know a lot of people had a really bad time. They got chewed up in this. They're trying to time breakouts, they're trying to buy breakdowns, they're, trying to trade intraday when it comes to this. This to me is kind of a nightmare zone. This is where I want to avoid spending too much of my time and attention looking at crypto and spend more time focusing on other things. Now, we may be entering another one of these areas. Now, I don't know how long this is going to take place, but it's definitely, we're in this chop zone right now. However, we do seem to be getting buyers every time we get into this $90,000 area. So as long as that is taking place, that shows me that there are some people out there that missed the breakout and they are very interested in getting involved every time we have a push down. So I'm going to just pay attention to that. If that's what's going on in crypto, then I think that's potentially the way you play it, as opposed to trying to buy breakouts, trying to buy momentum, where we're not really seeing that right now in this moment. It's good to find support areas and maybe take a shot there, especially if you're someone who's trying to strategically dollar cost average into crypto. It seems like, you can lean against this $90,000 area. Now, as a technician, it becomes very simple. When you see a consolidation like this, if we have a good close, some good action above it, it's probably a good time to be long. If we see some good action below it, it's probably a good time to take a short. Or if you're not someone who likes to short cryptocurrencies, just get out and wait for lower prices to buy back in. But Ethereum is something I really wanted to talk about, because how Bitcoin, we were talking, just bounced off the low end of its base. Ethereum's challenging the high end of this base that's happened right here. Let me clean this up a little bit for you. But Ethereum's been in this base for a very long time. Now, from the longer term chart, Ethereum has been, anyone who's followed cryptocurrency has been a dog. Hasn't been able to outperform Bitcoin in any way, shape, or form, right? We had Bitcoin breaking new highs and just ripping to those new highs. Ethereum hasn't even gotten close. So new highs being 4,100 100 or so. It tried for a second and then completely fell apart. So until we get a nice clean break of this, Ethereum is definitely the underperformer. It's a bit of the dog of the cryptocurrency space, even if you look at something like Solana. However, the reason Ethereum is so important to me is because I've heard a lot of people on StockTwits and other places talking about altcoin season's coming. I've seen a lot of those polls that when you go check on a symbol, it puts a poll. A lot of people think altcoin season is coming. For me, Ethereum and Solana as well, but Ethereum is a good altcoin barometer. If we get this breakout and push to new highs in Ethereum, then you could start to see this altcoin season. I've got some coins that I'm interested in. I'll talk about here in a second, but if we're just stuck in this range and we're stuck in this longer term range, then that's not so interesting. I'm not going to be really bullish there. Now, if we go to beauty of this is we can chart Bitcoin versus Ethereum. So this particular chart just shows us, let's do another exchange here. Yeah, this one. Nope. My apologies. That one will work. So this is essentially Bitcoin versus Ethereum. So instead of pricing Bitcoin US dollars, instead of pricing Ethereum US dollars, we're pricing Bitcoin in Ethereum. So it's a relative ratio chart. And what we're trying to do is trying to figure out when we could see some relative outperformance to Ethereum to activate this altcoin season. So we have Bitcoin. Basically this line goes down, Bitcoin's leading, this line goes up, Ethereum's leading. You see most of the time Bitcoin's your leader. It makes sense. It's the thing, you talk to your grandma and they talk about crypto, they say, oh, it's that Bitcoin thing. But we are seeing a little bit of a bounce here, showing that we are seeing some Ethereum outperformance. If this can continue to push higher, then I think we get that breakout in Ethereum, and then I think we start to see an altcoin season. So if you're someone who's a big crypto person and you want to check out what's happening with that space, I definitely think you can take a look at there. One that I'm watching really closely is actually Mana, so Decentraland. The reason for that is it's had this kind of cup and handle style look. Again, I'm still a technician, old school technician, so I take a look at these. Spent a lot of time kind of under this 30 cents or so, clean breakout, and now it's been pulling back kind of gently. If it can hold and break out to new highs, which is about 80 cents a share, I like the look of that. But again, I need to see this Ethereum move. I want to see this altcoin season. I'm not one that I'm going to trade some of these meme coins. So the lowest down the cap scale in the crypto world that I'll do is altcoins. So I'm rooting for an altcoin season. But as a technical analyst, what you have to do is you have to say, I want this to happen, but I need to see this to happen. So I'm not just jumping in at a random price. Nice little push up today in Mana. It's got some recent highs at 55 or so. So if we can get through that, that'd be kind of interesting. So from cryptocurrencies, let's just take a quick look at traditional currencies, and we can do that with, I think, UUP for now is a decent way to do it, or dollar versus Bitcoin. No, we can just use UUP. So the dollar, this chart's a bit weird because it does some dividends. There's a recent dividend that happened here, but the dollar has been pushing higher. So generally speaking, we don't want to see a ripping dollar if we want to see stocks make new highs. If people are buying the dollar, it means they're not buying stocks. It means they're not buying cryptocurrencies. And quite a bit, when we had this last push, this is your 2022 bear market, you can see right when the bear market in 2022 peaked, that was where the dollar started to pull back. So people started to sell dollars to buy stocks. We're seeing a little bit of the inverse here, so I want to see this chart potentially move a little bit lower in order to have be bullish on stocks. Now, speaking of, we can just pop right into stocks. So these daily charts that I have now, so this little candle right here, this is going to be today's pre-market action. So these candles actually include the pre-market action. I'll actually go to candles because I know some people, I'm a bar chart guy, but some people like candlesticks, so we'll do that. So this candle right here is today's action. And this candle here would be yesterday's action. So we're still in the pre-market. So this is pre-market action happening right here. So big wide range yesterday. It was a pretty wild day. A lot more of these small caps moving, quantum computers, all this craziness. This is what I expect to see as somebody who has been in this industry. There's a lot of gray in my beard, has been in this industry for a while. And as somebody who has spent about 10 years working in the hedge fund industry, I know that a lot of hedge funds for these 2 weeks, the Christmas and the New Year's week, they send their A team away to very nice places to eat very nice food and to do a lot of things that hedge fund managers do that we can't so much. Well, so what happens is you get the B team, right? You get the B team on deck, and they're generally more reactive to what's happening, and you get less volumes overall, right? If I am XYZ multi-billion dollar hedge fund manager, I'm not going to really aggressively put money to work during these lower volume holidays. I'm just not going to do that. I'm going to wait for the volume to come back in, which will likely happen next week, even though we have another holiday on Thursday next week. We'll likely see more volume start to come in. That is going to be something that I think is going to be make this market a little bit less choppy, because we've just seen wild actions. If you just compare the size of the candles here versus the size of the candles here, you can see how much crazier things have gotten over this last little bit. Now, we're getting a little bit of a pop-up today, but nothing to write home about yet. So I'm just checking to see if there's any news going on here. We have ISM manufacturing at 10 Eastern, so about an hour from now. That could move things, but it's nothing crazy like CPI. So when it comes to the market, this shaded box right here I have is what's all important, right? You can call it 580 or so on the S&P 500 or the SPY. I think that's your important level, because when we had that post FOMC flush, we came down, we hit that level perfectly. We came back to that 580, especially if I take this off, you can see a little better, that 580 right there. And then we came back to that 580 yesterday, and a buy program happened later in the day. And if you take a look, you can see late in the day, we decided to have these big green candles and we started to push higher. So we have to hold that 580. And I think that makes our lives as traders pretty simple. At least my plan anyway is I want to be buying stocks. I want to be buying pullbacks. I want to be buying names that I like if and when we hold above 580. If we close below 580 in any sort of meaningful, massive way, or if we close at 575 or something like that, then I think it's time to get a little bit more defensive. Maybe I'm going to sell some of my winners, and I'm going to try to figure out some different names that are occurring. Maybe to the short side, maybe some inverse ETFs, that kind of thing. But as long as we can hold this 580, that's very interesting. So another one that I always like to look at, which is kind of showing the same thing, is the RSP. So just a chat. For people who don't know equal weight versus cap weight, I think it's always a good thing to explain, and it's always something that I think really helps people. Cap weighted indexes are ones that they value the largest names out there, the massive names when it comes to your Teslas, your Amazons, your Nvidias. These are making up a large percentage of this index, the SPY. It's like 30% or something of the index if you take the Mag 7 plus a couple of just the really huge guys. They're a big part of this particular index. And that's fine. That's just how it is. It just weights by the market capitalization of the company. The bigger the company, the more effect it has. It's kind of always been the way it works. But we have a lot of ETFs nowadays. And one of them that I really like is the RSP. So it's the same 500 large cap names, but they're equally weighted. So every single name has a equal effect on the movement of the S&P 500. And the idea here is quite simple. It's that you want an overview of what the average stock is doing, right? Whatever the average stock is doing, that's what you're going to see in the RSP. And you can see the average stock really got smoked right before FOMC. So this sell-off was happening a long time before this FOMC day. However, just like the large cap index, we are digging in here, and it's about 173, 175. So we have some levels to play off of. And what we're looking for is those levels to hold. And what I look for is what are the names that are holding the best? What are the strongest names out there? Because those, in my opinion, are going to be the names that are going to be the most interesting, pushing higher when that occurs. So if we get a hold on this kind of 174, 173 on RSP, and we get a hold on that 580 on the S&P 500, we're going to be buying names. So, looking at the market this morning, again, there's not really much to look at just because there's only a small gap up here. So what I want to do is I want to start to look at different sectors, right? So you can see how this kind of top-down analysis of the market helps a lot of us technicians and traders get a broad theme of what's going on. We talked about how Bitcoin is a risk asset, is holding on pretty well. We talked about the S&P 500 and those large assets. They have a level that we can simply mark on our chart and say, okay, if we break this level, we start to get a little bit worried. If we're above this level, I think everything is still fine. It's still a pullback, just in an overlying uptrend. And now we start to look at what sectors are doing the best on the day, which are doing the poorest. And this will give us an idea of potentially where to start fishing if we have some names that we like. So uranium, for example, had a very interesting day yesterday. This is the URA ETF. And if we just kind of draw this level back, again, you can see this prior high right here was 27 bucks or so on the uranium ETF. We broke out from there. We pulled back into that area. And then so far we're holding this zone. So we had a nice massive candle yesterday that closed right at the highs. This is the kind of, if you're a big candlestick nerd, this is the kind of candle you want to see. Nice big green candle closed right at the high of the day. There's a very old trading adage that says that amateurs open the market, professionals close it. Just saying that generally speaking, right, these large institutions will be trading their orders all throughout the day. They can't do like we do as retail, where they just, hey, I want to buy 1,000 shares of stock. I can just hit the button on market open and get filled. They need to very carefully split their orders out all throughout the day and how things are moving. So we're having this nice push up. We had a close at the high of the day, and we have a push up so far in the pre-market. So uranium stocks might be interesting. And I know a lot of these low float stocks that a lot of people like SMR is one that could be interesting. So this is one of these small scale reactors, which to me sounds absolutely terrifying, but I know a lot of people are interested in. For those who don't know, a small scale reactor is essentially just one in which they're trying to build little nuclear reactors all over the place. I hope they're safe. I'm sure they're safe, but that's the kind of worry that I have when it comes to these. So if we start to see a lift in uranium, we have this one, and the only reason I picked this one is because it's just incredibly volatile. So this is a great a short-term trading vehicle for people like the story, maybe a long-term hold where, you know, this price right here is $17 a share, and then all the way up here we're talking 35 bucks a share. So we have a nice push. We have a nice range. If we think we're going to get to the high of the range, that's nearly a double from here. So that would be fantastic. So if uranium is going to move, then we can take a look at some of these lower cases. So you see, again, how we keep going down levels till we kind of find some names that we're interested in. So SMR is one that I am interested in. So I'm just going to simply set an alert here as well. If we can get above yesterday's high, I think that will be an interesting one to take a play on, just because I think market hours, there we go. I think if we can get above these 2-day highs on SMR, might be an interesting play. You know where you're wrong if we break and close below these lows, and then you know where you're right as well. And again, this is how this analysis works for me: is what sector is interesting, what's the overall market look like, then what sector is interesting, then just find some names within that sector that are working well as well. So NNE, I know, is another one that's one of these. NNE is one of these crazy ones. That's another nuclear reactor, right? This thing went from $3 to 30 and back to $6 and back to 30. So this is another wild one as well. So if we can get that kind of movement in uranium that's sustained, then maybe some interest comes back into these names. This one's been chopping sideways for a long period of time too, so people have forgot about this guy as well. China. So we're having a little gap up in China today. You can see I marked up this level a while ago when it comes to China. It's a pretty big level, right? It's a pretty big level here. For this prior high, you're talking $29 a share. This is FXI, so this is your Chinese large cap. You can also look at KWEB, which is Chinese internet. I like to just look at the big guys because China's worrisome enough when it comes to the reporting. So the idea is we have this range that every time we come down to, we're finding some support here. So we had this massive breakout, and this is where China just threw the kitchen sink at their market. They said, we're going to start stimulus, we're going to lower interest rates, we're going to promote home buying, we're going to everything in the world. And just a massive move from $25 up to 37. So almost a double, not quite, when it came to just this particular move. So now we're pulling back. And every time so far we hit this $30 a share, we're trying to dig in and get some support in here. So looks like We're having another little gap up and another little push today. So this is something that, again, it makes sense to go down to some of your favorite Chinese names, right? You could pick Alibaba, BABA, for example, right? This thing's trying to dig in around this level as well. If the FXI index is going to be strong, if you're going to get a lot of these moves that are going to happen, in the overall index, you're going to see things like BABA, JD.com are going to be interested. I know some people like something like the EV names like NEO and XPeng. These are going to be more speculative names, but they're names that you can check out as well. So we know that we can participate in some of these names as long as this index holds this level. Again, it's all about generating a plan for what's going on based off what we're seeing in the market. What are they buying? Right? We've got 10 minutes before the market opens. What are they buying? That's what we want to look at and say, okay, why are they buying it? And then also we can be looking at what are they selling, right? Natural gas continues to push down. Solar continues to have a little bit of a bad day, but not too bad. Right, MSOS had a nice little gap yesterday and is just kind of holding on today. So we can start to take a look at some of these names as we kind of go down this list. One sector that stood out to me this morning is PSIL for you guys out there, you psychedelic enjoyers. This massive pop here, this is a psychedelic ETF. This insane move was from that drug stock, DRUG. This craziness that happened right here where this thing went from $1 to 43 bucks. That's what caused that spike right here. The rest of this action is just seemed to be based off of they rebalanced and now they're kind of more split. So we had a nice push up over the last 2 days into the holiday. I did a little tweet about how everyone was excited for their psychedelics on the holiday, and we had a nice little push up yesterday. So this is another one of those sectors that I think could benefit from some sort of beginning of the year rally where people are trying to, again, as someone who worked in the hedge funds for a long time, I know what's happening right now in a lot of these boardrooms, and they're sitting around saying, okay, AI was fun, Ozempic was fun, what's going to happen this year? And people are starting to go through their lists and saying, well, maybe it'll be nuclear, or maybe it will be marijuana gets legalized, or psychedelics. These things pass some sort of phase 3 trials, that a lot of this craziness starts to trying to figure out what sector is next. Because if you were early on AI, if you were early on Ozempic and you were a hedge fund, everybody loves you. If you were late on those things, not so much. So they're spending a lot of time focusing on this. So if we're going to see the psychedelic sector move, it makes sense to start taking a look at some of these. CYBN, I know, is one. You can start taking a look at some of these individual names and just start to mark off levels, right? Because again, what we're doing again is we're going from overall market, trying to grab some sentiment there, individual sector, trying to grab some sentiment there, then individual stocks and trying to say, okay, what levels can I play against, right? You'll notice with me, there's not a lot of indicators on my screen. I don't look for, the MACD to cross the RSI to cross the star and the moon or whatever. It's more about, right, give me levels to play off of. Show me where there was buyers and sellers that came into the market before, and then I'm going to take a look to try to figure out which ones of those are happening again. So this CYBN is one that's interesting. We have a level, right, and came into 850 here, had a nice bounce off, went all the way to $14. That's a pretty crazy move. And then back down to 850 where it's bouncing a little bit again. So if we see it continue to move in the psychedelic space, the CYBN might be one that's interesting. I can't remember all of them off my top of my head, but MindMed's another one. Full disclosure, I own a little bit of this just because this cup and handle that's been going on. They've entered phase 3 trials recently. The sector looks well. So I've been buying a little bit in this zone right here as it's been pulling back. So this is, anyone who's ever read How to Make Money in Stocks by William O'Neill. If you haven't, I certainly highly suggest doing it. It's an amazing, amazing book from one of the greats in our industry. And he just talks about the cup and handle pattern. And again, I'm not one that I believe that there's any mysticism to these patterns, but I think it's important to just take a step back, say, what is this technical pattern telling us? What picture is this painting us? So the cup part of it just means the stock was going down, and then it stopped going down for a period of time, and then it went up, right? That's simply put, but that's what the cup and handle pattern is looking for, right? So MindMed had a really bad time here. It went from 18 bucks or so all the way down to $2. And then at $2, it stopped going down and it kind of chopped between $2 and $4 for years. And then it broke out. And when it broke out of that $5, it went all the way back up to like $12 or so. So not quite to where it broke down from, but pretty close, right? And, horseshoes and hand grenades, right? And then we just start to have this slow consolidation backwards. This makes up the handle. And what you're looking for in the handle is this pullback to be met with buyers. So if the handle comes all the way down here, like deep into the cup, then the pattern is void. So again, trying to explain psychologically why these things make sense in order to make trades off them. As this is coming down, you want to see buyers step in. So every time you have a little bit of push down, you want to have a buyer come in and move it higher. And as you push down, you move it higher. You can see how this pullback is very, very different from this one. This one just fell off a stone. There was no buyers here. Nobody was interested in this name back at this point. It wouldn't make any sense to be buying something that's just dropping like a rock like this. However, now that it showed that it potentially has put in a bottom, and this every time we dip down here, there seems to be some buyers coming in that are stabilizing the price. That shows me that this could be a name that if PSIL, so that psychedelic sector, pushes higher, this could push higher as well. So you see how you need all of these stacks upon stacks of things to work in order to place a trade. And that stops us from trading just to trade because we're bored or we want to take a gamble or something, right? I need to see Bitcoin and the S&P 500 hold up, because if those are dropping, this is probably just going to drop with it. And then I need to see that psychedelic sectors continue to hold up. And then I need to see a breakout on MindMed in order to add to my position. So I'm laying out these plans for myself when it comes to that. So that's kind of a top down when it comes to what's happening in the overall market today. There's really nothing that has stood out too much other than, we're starting to have this flight into things like oil, and we're starting to have this flight away from some of the big tech things and into more real, I guess you could put it, names, right? We have silver catching a bid down here. We have oil catching a bid, right? Starting to break out. We have oil services starting to hold well. So we're starting to see a lot of different names when it comes to names that we weren't seeing rally before, I guess is the best way to put it. So, USO, this hasn't done anything, right? We've had Nvidia 10x and oil has not moved. Silver, right? We've had gold just rocket, right? Gold is as high as it's ever been, and silver has done nothing. So what we want to see in markets is we want to see rotation, is what us technicians call it, where people take money from somewhere and then they put it somewhere else. That's what causes rotation. So if I made millions of dollars in Nvidia, say I'm a hedge fund manager and I made billions in Nvidia, what we don't want to see is the hedge fund manager sell Nvidia and buy bonds or go to cash or something like that, because that doesn't help us, because that means that that person, with all of the information that they have, that person is worried about the market. They're going to defensive access. They're going to things that they're going to hoard cash because they're worried about the future of the market or the economy. If you're selling Nvidia and you're buying things like oil services, psychedelic companies, China, you're spreading your money down through other sectors. Well, that's what we want to see, because it shows that these people they're not looking to go to cash. They're not looking to be defensive and to, hide in their turtle shell. What they're looking for is, okay, what's next, right? I made a bunch of money in Nvidia. I'm still hyped for the market. I'm still hyped for the economy. Where can I put my money next? And that's what more or less we try to do as technicians, right? As technicians, we're not, again, magic patterns and things like this. We sometimes get a bad rap for some of this. What we're trying to just pin is, okay, where is the money going to flow back into, right? Are they going to continue to buy Nvidia? I don't know. I wouldn't bet on that, just because it's up so much and everyone knows the story. And once everyone knows the story, it might be too late. What I'm always doing is I'm trying to look for what's next, right? And again, uranium looks interesting. We saw it today. The psychedelic sector looked very interesting. We see some oil and these type of things looking well. And now we can just pop into some individual of these these crazy names and take a look and see what we can find when it comes to some of these crazier names out here. So I'm going to grab this and make this like a 5-minute chart. So this is just a gap scanner. So we can just quickly go through. We only got a few minutes left on what's gapping the most and maybe why it's gapping. And this is a good way to say, is there a theme that's gapping up? Oh, I need to do this one. There we go. We can pop over to this. So we have a gap scanner here. And we're saying, hey, what's gapping up the most today? So some of these are going to be some pretty wild speculatives. Name this NITO is up 106% from there. Okay. This is a clean tech company, right? So we can read all about these companies and try to figure out what's going on here. So there's the bell. So we can start to look and maybe we can see a theme. So this is an agri-food tech company that specializes in eco crop protection. So there we go. And we can go read the news if we want. Again, I'm more of a technician. So I'm looking at this thing. It's up 708% in 3 days, which is pretty wild. Making new highs here. And sometimes you see themes and sometimes you don't, right? So this is another artificial intelligence type play. So these are lower float. Generally, if you have gaps that are in the 30, 40, 50%, generally going to be pretty low float plays. So we're seeing some more AI type plays. That doesn't surprise us. That food one kind of shocked me a little bit, but there's a medical company that's moving. So not really much of a theme. It just seems like we're getting more of these speculative plays. And I talked about this in the beginning, but I'll say for people who've just joined, this is exactly what you expect in these holiday weeks. And we have a couple holiday weeks going on, right? We had Christmas, now we have New Year's, and then we have, I'm Canadian, his name was Carter, I believe, one of your guys' presidents passed, and that is going to lead to a holiday next week. So when you have a lot of these holidays back to back, you have a lot of the big guys out there taking vacations. So what you see is a lot of these speculative type plays. So if you're someone who's an intraday trader, a very short-term trader, it might make sense to start to take a look at some of these plays. But just know that anything that you're talking about that's up, that has gapped up 105% is going to be incredibly risky, incredibly volatile. And you just want to make sure that that is the case. Now, what I generally like to do when the market opens is I just want to take a look at the S&P 500, and I want to do that on a little bit of a short-term basis, just see where the fight is taking place right off the open here. So I'll actually turn off pre-market range. So this is our opening candle, right? Switch this back, right? Here's our opening candle right here. So this is a 5-minute candle. Again, I'm not really a day trader. I'm more of a swing trader, kind of longer term thematic type play. Again, I do quantitative stuff over my website. So I just have systems that say, hey, look to buy this here, look to sell this here, based off back tests that I've done and things that I've run. But I find looking at the first couple minutes of the open can give us a bit of a theme for how's everyone feeling this morning. If the market opens, it just completely sells off, then it's like, okay, maybe people are feeling a little bit nervous about the markets. They're just not really excited. However, we gapped up and we sold off just a little bit, and now we're running to new highs. So it's great, right? I'm bullish. I own stocks. We talked about that 580 and why I wanted to see us hold the 580. So if we can hold this gap that happened right here, and I'll just mark this up, right? This gap kind of right in here. If we can hold this gap, then I'm very interested in potentially adding to some of my positions. If this gap fades and we break through the gap, then that's where, I need to get a little bit nervous. Now, if we go to the daily chart a little bit more, we can see that we've got a lot of highs here at kind of 590. So that's another area that I want to mark off. And that's I think this gap right here. So we can just mark this gap. So we're developing kind of what we want to see in order to take some more swing trades, in order to add some more to some positions. We want to see this gap hold, right? And then we want to see us potentially move to or through this gap right here. If we do, that's pretty substantial, right? Because this is the FOMC move down. If we get back to that area, that kind of shows us that, okay, we are potentially holding this 580. Could cause a lot of people to start FOMOing in and trying to get involved that way. So we get a new candle here in a minute, so it'll be interesting to see what that happens. Excuse me. Just a little chug of coffee to keep going. So At the same time, I'm watching these sectors here, right? So PSIL, which we just talked about, is up 2.8%. Right? This thing you can see doesn't trade very much. It's a bit illiquid. So we can look at some of the names we talked about. MindMed is gapping up and running today. Another way that might be easier for you guys to see is we can do this map right here. So this particular map, this is showing us just a heat map of change from the close. This is a custom list that I put into it of the sectors that I'm interested in. And you can just get a good overall look at what's moving and potentially what kind of themes are going on, right? So psychedelics are doing very well. We have XBI, which is biotechs, are doing well. WGMI is a Bitcoin miners ETF, so maybe that's something that we want to take a look at. Let's go to, yeah, let's do that. Let's take a look at miners. And then we have ARK, and ARK is doing okay as well. So let's go take a look at some of these Bitcoin miners. Quick check in on the SPY, that first 5 minute held. My favorite miner is Mara, and that's not doing anything. And the reason I'm interested in Mara is it generally has a pretty good short float. Yeah, Mara is 25% shorted. So 1/4 of the entire float is short Mara. So I thought that might get moving if we were seeing that Bitcoin miners index go. We could check out Riot blockchain. That's not moving either. Wolf, TeraWolf, that's not moving either. Okay, so we might just be getting a little gap up here, and maybe that's getting accentuated. I don't know what's in WGMI holdings. Okay, a lot of these I haven't heard about. Clean Spark, IREN, IREN. Yeah, these aren't really that interesting to me. So it's good to take a look, but not moving so well. So we have the S&P 500 pulling back just a little bit off the open, but still, again, we just want to see any pullback get met, and we can hold this gap and then potentially turn this particular market higher. But this first 30 minutes or so is very interesting, right? You get a lot of these conflicting orders and fights going on in the market. So I'll generally keep an eye on this. Every now and then, if I see something really obvious, I'll shoot a trade out. But I'm more interested in how we hold these certain levels that I've marked so that I can go into these areas that I'm more interested that we talked about earlier, right? So we can check out BABA. We just talked about BABA and how this area was holding in the FXI. So we need to see some sort of push or sustained move above $85 a share. So again, we can go into 5 minute. Let me just mark that. There we go. That makes it easier. We can go into this 5 minute chart, and then we can just start to mark the opening range. We don't have to be fancy with it, right? We don't have to be crazy. We can say, if I like FXI and I like BABA, well, let's just let it trade for the first 10, 15 minutes. We're 7 minutes in, so maybe another couple minutes now. And we can just kind of mark the high and the low of this candle and say, yeah, let me get involved if we break this high, and then I'll just put a stop loss kind of under this area. And if I'm right, maybe we get a nice couple days or a week or a month out of it if it keeps going. And if I'm wrong, I'm out pretty quick, right? What's interesting is these two bottoming tails here. So another kind of candlestick analysis to try to de-voodoo technical analysis out there. All this is telling me is that in the first 5 minutes, we had a big flush down and some buyers came in. And then in the next 5 minutes, we had another big flush down and some buyers came in. So at least for now, this zone, this $85 to $84 a share in BABA is kind of interesting. So I hope we hold on here for another couple minutes in this zone and we don't rock it so already. But if we do, maybe I just got to chase it up a little higher. But you can see how top down we developed a plan, right? Bitcoin is holding. We have the S&P 500 holding. And then we had FXI holding. So then we were kind of interested if that's going to take place, then we want to maybe get involved in some BABA. And we're doing this from a longer term chart because I want to kind of get involved here in the 85s and hope that potentially we go to these highs if, hopefully China comes out on the weekend and goes, hey, let's take a look at throwing more money into the market like we've been doing. That could be something interesting because, again, I would love that because that's just kind of what happened recently. So let me tease you guys a little bit. I know a little bit shorthanded today, so you're hearing me rant for a long time. But I mentioned that over at my website that we do quantitative trading. So I have back tests that go back, 20, 25 years and say, if you do this, this is your win rate, this is your potential return you can make, and this is where things will go bad, which is the most important things, where your stop loss is in. And some things are starting to pop through that actual scanner right now that I'll share with you guys. So this is a revision to the mean scanner, or a revision to the mean system. The idea is that we're looking to buy very strong names that are pulling back a little bit dramatically. And if we can get good prices on them, roughly it's like a 56, 57% win rate and a 1.5 to 2 to 1 risk reward. And the two that just came through, as I look up to see here, are both healthcare companies. So NHI, which is National Health Investors, and HCA, which is HCA Healthcare Inc., both pop through as these things have been incredibly beaten up. Let's look at a weekly chart, right? You can see very, very strong, right? This is, again, you don't need to be a CMT to say, hey, this is an uptrend. Things are moving higher, but it's down many, many weeks in a row. So the idea behind this system that I created is just you're looking for small pops to buy the dips. And then it all just came down to kind of quantifying where we can get a really good risk reward for our play and what we want. So these are two names that are going to be interesting. Now, what I do, as opposed to just buying because the system told me to, I think now is when it comes a little bit of technical analysis works, right? I've done all the quantitative analysis, and it says, hey, HCA is interesting down here, and NIH is interesting down here. But let's go. Is it XLV? Is that our healthcare? Yeah, that's our healthcare sector. So first of all, right, just like we did with the other top-down analysis, I want to take a look at what's happening in the healthcare sector today, because that's going to govern if the healthcare sector is falling off a cliff and making new low after new low after new low. I don't want to go out there and put my own money into a bunch of healthcare stocks. I don't think that's something that makes a whole lot of sense. But if we can hold in the healthcare sector, and these stocks that have come through my system are saying, hey, you should take a look at buying here, then I think we can actually end up having a pretty good trade, right? So healthcare looks kind of a lot like the S&P 500, right? Where we have a predefined low that happened right after that FOMC low. You can call it 136 on the XLV, which is our healthcare sector. So as long as we hold that, which, looks like we're not falling off a cliff anyway, but at least for now we're holding on the XLV. That makes me a little bit more interested. So when I go to something like an HCA, I then just want to see evidence that the price that my system said is a good price is holding in some way, right? And that's where we zoom into our intraday chart. Depending on how aggressive you are, you can do a 5-minute chart. I usually go all the way up to a 30-minute chart. I'm just doing shorter term charts just because we're a little bit more action packed here, trying to show things on the open. So, the system said around 192 is the place to focus. So I want to see some buying happening here at 192. I just don't want to hop in just because that's what happened, right? It just said, hey, buy it. I'm not just going to blindly follow it, but I want to keep an eye on it. So this is where patience when it comes to trading is really, really important. You could do certain things like, hey, maybe I want to anchor a VWAP. Right, I want to put a VWAP, which is volume weighted average price, which is a something that is used a lot by institutions to fill orders. I won't rant too long about it, but essentially, if I'm sending an order to a hedge fund, I'm saying, hey, can you fill these 10 million shares of stock? I need to know whether or not they got me a good price, right? So I'm going to compare that to what the volume weighted average price was. I don't want to compare it to the open or the close or anything like that. I just want to say, what was the average price traded for the stock? And if you got better than that, so if I'm telling you to buy HCA here and you get me a price that was less than the VWAP for the day, I'm going to be a happy camper. If you got me a way worse price than the VWAP for the day, I'm not going to be too happy, and I may not be a client of yours going forward, right? So there's a lot of algorithms, a lot of games that will be played around VWAP. So something simple that you could do that I'm looking at here on HCA, say if we get and hold above that VWAP, maybe I get involved on that algorithm that I have for this pullback play. NIH is a little bit less liquid, so I'm a little bit less interested, especially talking about that on the show, just because, right, there's, I don't know, people watching and I don't want to get them hurt. So big check in on the S&P 500, still holding that gap, still doing very well. FXI holding okay, and then BABA pulling back a little bit, but that's good. So now we're about 15 minutes in. We got 1 minute till 15 minutes. So we can just very easily mark the high of the day, and then we can mark the low of the day, and say, I'd probably mark actually down here some. And now we have my plan for Baba, right? I'm no longer thinking. And I think that's a very important part when you're trying to make these decisions, is that you try to remove as much thinking as possible, right? We made our play, we made our idea, and now we just need to figure out kind of what's happening from there. So if we get a move over 85.46, then I'm probably going to be a buyer. So 85.50, we'll just say I'm probably going to be a buyer of Baba. If we break back down to kind of 84.5, I'll be out. And again, my idea is simply, can we hold this area right here, these lows, and start to push higher? Can we maybe get back to this zone right here over days or weeks, and I can get a really good entry? That's the idea. Is what's the best risk reward type play that I can see. Other than that, not a huge lot. We still have the psychedelic sector moving higher. So that's going to be good for my MindMed and MD. Nope. So that's pulling back a little bit. It popped a little bit earlier. We're pulling back a little bit there on this. We have ARK moving. If ARK is moving, then we probably actually have Tesla moving, because that's a big component to it. Tesla having a pullback. It missed some numbers, I believe, yesterday. It looks like that might be recovering. It's, again, another benefit of technical analysis. I feel like I'm a preacher here, but every time I post charts, everyone goes, this is astrology. But I'm trying to show you guys how you can use this without like fully drinking the Kool-Aid when it comes to like bat patterns and weird stuff like that. We know that Tesla had bad news yesterday. So the question, there's two questions. Are they buying it or are they selling it? Are people feeling FOMO that they didn't get into Tesla fast enough, right? Are they feeling FOMO that they didn't buy Tesla? Excuse me. They didn't buy Tesla on this breakout, right? If they're feeling FOMO that they didn't buy Tesla on this particular breakout, then you're going to see when bad news happens, institutions come in and support the stock by buying it. If people are looking for a reason to take profit, then they'll take bad news and they'll just, right, take the thing to the woodshed, and you'll just see it completely fall apart. So if we get a nice bounce today, that's kind of what we're seeing here. Let's go into a 30-minute chart, right? So this is yesterday's action right here, and then this is today's action. If we start to see yesterday's action get completely reversed and we start to get into the range yesterday, those numbers are just forgotten about entirely, then it's like, okay, they were looking for an excuse to buy the dip. And you can start to take these ideas when it comes to what happened in the news, what's the story, right? What's the theme, and then apply some technical analysis to it, and it ends up making you a better trader. And again, as someone who spent a lot of time in the hedge fund space, that's what they're doing, right? They're not just trading because this thing made a head and shoulders or a double top or something like that. And they're not just buying Tesla because they like Elon, right? There is a combination of these things. They'll come up with a theme. They'll say, I like this stock for this reason. This is something that's interesting to me. They will then take that theme and generally give it to a technician and say, okay, I want to buy Tesla. You are the one who has to decide when to pull these triggers, right? And that will become a different question when it comes to a lot of these things is, right, do we end up seeing this, this aggressive buying come in on bad news, or do we end up seeing the opposite where they take it to the woodshed? So that's why these areas, especially gaps, are very important, because we're just trying to mark out and say, where are people hurt, right? People are hurt in this kind of zone because they went to sleep and this happened, and they woke up and Tesla missed delivery orders and the thing pooped. So if they come back from work, right? You got to remember, most people aren't junkies like us, and they're not watching live streams at this time. Most people, they buy a stock on their Robinhood app, they go to their job, and then they come back and they hope they're up a couple money so they can buy a little bit more expensive beer on the weekend. Right? Most people are doing that kind of thing. So if they come back and we have made another low, that's more of the, oh no, right? These delivery orders are so bad that, right, the market continues to go lower. If they come back and we've reversed that position, that sentiment just switches, right? So that's kind of, I guess, the big theme I wanted to give to you guys when it comes to technical analysis is, again, we're not mystics that are looking for things. We're trying to see where buyers and sellers put their money in to move stocks one way or another. It's the only way stocks move is you have buyers more aggressive than sellers, you have sellers more aggressive than buyers. Where did they do that? Why did they do that? And then can we build a plan off of that as well, right? Again, as somebody who owns a bit of Tesla, right? I'm always looking for places to add to Tesla. If we go to the very long-term chart of Tesla, you can see we just hit new all-time highs, a little bit above, and then we started to fall. So I'm one that I'm like, okay, I'm interested in maybe getting involved in Tesla. So what I'm going to do is I'm going to do the same thing that I've been doing with you guys all throughout when it came to my MindMed position, and I'm looking to get in Baba, is I'm interested in this name, but I'm then not just going to push a button and buy it because that hasn't worked out well for me. I hope it worked out well for other people if they did it. So I'm developing ideas. I'm saying, okay, well, we had this nice push up. This was all the post-election craziness where, okay, Elon's part of the government basically. So you have this nice push up, this nice strong move that came from that. And then now we're starting to pull back. So I want very good risk reward plays. That's all I'm after. I know that I'm going to be right half of the time. Right? I'm not going to be one of those guys who go, yeah, I'm right all the time. I make money every day. It's amazing. What makes me money personally as a trader is that when I'm wrong, I take a very small hit and I move on with my life. If I'm right, I'm looking for a very big move. And Baba's a perfect example of what I'm looking for here, right? I'm looking to say, if Baba can break this high, then I'm probably going to get involved. And this is my risk. My risk is very, very tiny. And then I said, I'd love for it to get back to 90 bucks. I'd love for it to get back to 118 bucks. And I'm risking about $1. So if it gets up to 90, that's $5. So that's 5 times my risk. If it gets up to 100, that's 15 times my risk. So I can understand that I'm wrong very often, that all I need is a couple of those really big ones every now and then to get by. It's not fun being wrong that much, but it's kind of just the way it goes. So the same kind of thing I'm looking at Tesla. I'm trying to devise a plan of, okay, we're pulling back here. Numbers were not good. People were not happy. So we had a high of 490, we could say, and now we're down to kind of 377. We had a nice kind of pullback in that zone. So I'm looking to see for some sort of action of, are we going to dig in here, right? We've had a nice little push up in this first 30-minute candle. If we go into the fives, you can see we pushed up. We had some equal highs at 388, and then we pulled back. So if we can hold this, and this is the VWAP from yesterday and today. So this is the average price of people buying for the entire year, right? It's 2 days, but it will track as the year goes on. And what I'm looking to say is, okay, I want it to get into this gap. So the high of this gap is kind of 392, and I want to see us to get into that gap, because if the guy who bought on this day, who had a bad day yesterday because those orders were bad, if we can reverse his day and he has a good day today, then that just, again, it's a sentiment flip. It's a flip in people's minds saying, I'm bearish or I'm bullish, right? And at the end of the day, vibes control everything. That's a lot of what we're doing in technical analysis. We're trying to detect the vibes and saying, right, this is what's an interesting sector that people are going to put their money in. This is what a not interesting sector that people won't put their money in. And what's going to happen with these different markets, right? And again, it just becomes a game of who's going to put money and where are they going to put the money in as well. So the other thing is, I wanted to know, where's my studio? Here it is. There we go. The other thing I just wanted to, again, remind people is that today is probably going to be a very choppy day. I'm not going to put a whole bunch of money to work today. I expect choppy action. And the reason for, again, I've talked about now a few times, is that look at the size of these candles here versus look at the size of the normal candle. So let's actually quantify this for you guys as the quant. Let's do ATR. Yeah, we'll do an ATR and we'll just make it like a 5 period. All right, so what this chart is just showing us is essentially this guy here. Just saying, how big on average are the candles? Very much like to keep things simple. Over the last 5 days, how big are the candles? And you can see when we have these crazy down moves, it spikes up a little bit. But let's look at right before the holidays and then during the holidays. So right before the holidays, these candles were very, very small, and that's just shown by this graph right here. They're small and they're getting smaller. This is more institutional action. Generally, will create these smaller candles because you have people buying and selling and kind of fighting back and forth one way or the other. Now, as things spike and you get this kind of pop up here, that's just saying that these candles are getting very wide and these candles are getting much bigger. So what does a candle mean? What is candlestick analysis? Just to, again, demystify this stuff as much as I can. It's just how big the range is today. How far were sellers able to push down before buyers came in? How high were buyers be able to push up when sellers come in? And you'll notice this by saying, if you just watch any news program at the end of the day, oh, the market was up 2% today, or it was down 1% yesterday, or it was up, versus sometimes you see, okay, it's only up 0.25% or 0.1% or whatever. When you have these wide range days, you just generally know that there's more retail involvement going on, because us retail people were the ones, hands up, especially when I was new, that will FOMO into things that are stretched one way or the other. Large institutions and hedge funds, they're ones that are looking for things to come into an area that they're interested in. If they have a price target of Apple of $100, that's what they're going to do. They're going to get that in at $100. They're not going to buy it at 120 because that 20% difference for them on that trade is a huge deal. People will FOMO, especially retail, will FOMO pretty heavily into names, right? So again, what we're trying to do is we're trying to come up with these plans beforehand so we don't need to react after. Now it looks like we're starting to come in a little bit today. Yeah, we're right in the middle. We keep challenging this gap and popping up. So again, my day is pretty settled, right? I talked about Baba. I need to see a breakout here. If we break down into this zone, not interested, right? I'll move on and find something else. Talked about MindMed and the psychedelic companies. They're doing a lot of the same things. Had a nice gap up and push early. Now it's coming back in to test yesterday's range. We'll see what happens there as well. A couple of these things, again, they're still setting up. If you go to PSIL, that one's still up on the day. I guess MindMed is just down. What was the other one we were looking at? CYBN? Yeah, so that one's pushing up. So that might be another one to look at as opposed to MindMed. If I'm looking at a sector and I'm interested in the sector, I generally want to go to some of the strongest names in that sector. I don't want to be the guy picking the one that's down. I want to buy the relatively strong name. I'm running out of time today, but maybe that's something we'll talk about in the future, that there's a whole bunch of like peer-reviewed academic studies about the benefits to buying strength and buying things that are pushing higher and moving higher, as opposed to trying to buy the things that are the weakest names out there. There's just a myriad of studies that I've read going back like 100 years of, right, saying, hey, if you're in the strongest names, you're going to do a lot better. So when it comes to this sector breakdown, if I'm looking at something like a CYBN that's making new highs, and then I'm looking at something like a MindMed that's pulling back, then if I have money to allocate to the psychedelic sector, then I'm probably going to do it in that stronger of the two names. And then again, depending on your time frame, you may look at that and say, well, MindMed is obviously overall stronger than CYBN. So if you're a more longer term person, then you would focus on this. If you're a more shorter term person, then you would focus on the other one. So let's just do another quick check-in with the sector map before I let you guys go. And just say, hey, I appreciate being invited by StockTwits to do this. I hope I was able to at least entertain or educate some, showing what's going on in this crazy market today. So as I look at this, nothing's really changed, right? A lot of these sectors are still the same. We have uranium still doing okay. Here at the bottom, we still have natural gas and the JETS ETF. So the ETF of all of the airlines are doing poorly. We have PSIL, WGMI, so psychedelics and Bitcoin miners doing okay. This is a clean energy ETF that's doing okay. We have semiconductors and we have ARC. So a lot of speculative one. Lastly, actually, with 1 minute left, let's just take a quick look at NLR. So talked about uranium, and we talked about some of those small miners that are interesting. This is just an ETF I found the other day, and the essentially what it's just looking for is it's gathering all of those. So if you're worried about like these small nuclear guys versus the big nuclear guys and versus uranium as a security and you don't know what to invest in, this is one that's trying to remove that from you. So if you're interested in the uranium sector, or sorry, the nuclear sector, and what that nuclear sector will do, especially because I think it's all AI related. So if the AI trade is going to continue, this is an interesting one to take a look at. So NLR is the name of it. It's VanEck. I've just been looking at this. It's been doing very well. And it's obviously been picking up in volume as things are going. So that is my hour. Again, I appreciate you all for coming by, for checking out, for comments, all that kind of stuff. I appreciate it very much. I just